go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
A bit of a positive start is what we've seen coming in from the Asian market.
No ship is going to, or out of Iran without our approval.
Oil's at $105 odd dollars a barrel, 104, 105, 23,700 on the Nifty.
After 18 months of, a problem with regards to their go-to-market strategy in the offline space, etc., the net profit has grown 4 times. It's crossed the 10,000 crore revenue milestone for the full year.
If the crisis persists for long, it can certainly have impact.
RBI's inclination is not to use interest rate as an instrument to defend the currency.
It could mark another year of extraordinarily large payouts from the central bank to the government.
Above the 23,800 mark on the Nifty, we did make that swift recovery from the lows.
Well, that is the day so far. Markets, of course, are looking a lot better. Rupees looking a lot better as we wrap up the week. We are coming to you from the CNBC-TV18 Motilal Oswal studios. There is, I guess, a little element that you don't want to go in too negative, because the week, as we came in this morning, the Nifty was about 5 points higher. And of course, the market generally has been pretty large amounts of shorts in the system. So you may be seeing a little bit of covering as you go into the weekend. Headlines with regards to Iran, etc., may cause a bit of a flutter, may cause a bit of a move. I guess the risk is if you're short, you're stopped out or you lose. So I guess that short covering element at play, 0.4% on the Nifty. I'm Prashant. With me, my colleagues Nigel and Reema. Guys, hi.
Hi, afternoon. We were actually trending very nicely till about 1 o'clock.
Yeah.
The Nifty had crossed that 23,800. It's just in the last 1.5 hours. We've given up a little bit from the top. There you have it. That's the slide in the last 1.5 hours, but still holding comfortably with a gain of about 0.4%. The Nifty at that 23,750. And all of the week's gains that you are seeing, that's 0.5% on the Nifty, 1.5% on the mid-cap index, is courtesy today's gain. But what's heartening is the move in the financials today. The Nifty, particularly the private sector banks, so whether it's Axis Bank, ICICI, Kotak Mahindra Bank, that's the leadership pocket for the day. So that's good.
Well, that's right. I'm personally hoping that there were no shorts that were covered today. The reason I say that is because you want some big bang news to come in there, and then the shorts get caught on the wrong side if there's something that's going to come over the weekend. So I don't want those shorts to get wasted, and this 23,800 mark has become a bit of a resistance zone, because yet again, we're not able to cross that mark. So we'll have to keep an eye on that. But the positive is, in April, number of stocks advancing outweigh the number of stocks declining. And in May, that trend is continued as well. And the Indian rupee, everyone was throwing in the towel, 97 odd. That hasn't happened. So that's good. It's actually sub that 96 odd mark. The question is, how do you position yourself in the final hour of trade? Mitesh Thakur joins us on the show. Hi, Mitesh. Good afternoon. Good to see you in. This market is net short. We're holding at around 90 points higher. We've come off the top, though. What is your trade at around this 23,740? At this mark, what would you do?
Yeah. So, I think, like many other days, I've advocated, selling around 23,800 plus level for the stock, about 23,900, and that being the upper mid range. And we expect, we might go back to 23,400, 23,350 zone, which is the support area. That's where you kind of remove your shorts and try to see if you can take some long trades. And on the index, it's a very narrow range, and we don't have a sign of the index as of yet, giving direction move. So I think this range trade kind of keeps on playing. On the stock side, I have a sell on ITC with a stop at about 307 quarter, 307 half for a target of 295, while Indigo is a buy with a stop below 4,400 for targets of 4,560.
Got that. Let's talk about the many earnings that we've got through the day. Stocks are reacting majorly to those. Upasana is now standing by with details on those. Upasana?
Well, first up, let me start with TTK Prestige. The company reported a strong revenue growth of 12% this time around in Q4. This was mainly fueled by the company's heightened sales seen due to induction cooktop because of the LPG crisis. Now, historically, if we see the trend, the induction top performs nearly 12 to 13% of the sales, and it's a high margin product. If we talk about the gross margins, they have also seen a jump up of nearly about 300 basis points at 44.6%, and EBITDA margins are under pressure at 130 bips at 10.5%. If you look at the full year revenue trend, that has also been quite encouraging. As FY24, the revenue was just about 2%. FY25, there was a revenue decline of 3%. And now if you look at FY26, there's a revenue jump up of nearly about 10% on year-on-year basis. Next up is Info Edge, reported a strong growth of 17% in Q4. Margins, company has managed to remain above 40% level at 43.2%. The key drivers this time around was the company's recruitment business and even 99 acres, which reported a double-digit growth throughout. Now, 99 acres also turned EBIT positive in Q4. Next up is LIC. Overall, it's been a good result. APE growth stands at 22% on year-on-year basis, and VNB margins on the back of the product mix have also expanded by nearly about 692 basis points. Next up is RCF. The stock continued to see gains since the start of the session. Adjusted net profit has nearly doubled, and company's margins have also seen a sharp jump up of 100 basis points at 5.8%. And lastly, coming to LG Electronics, revenue was largely in line with the street estimates, while margins and PAT was much below. Now, Q4 revenue growth stood at 8%, which was driven by the demand recovery seen across the segments. Margins, though, remained under pressure, which is why the stock also remained under pressure. Margins down about 230 basis points at 11.7% versus the 13% is what the street was working with. And the margins were majorly impacted because of the elevated prices and even rupee depreciation. So all in all, these are the stocks that remain in focus today on the back of earnings.
Thank you very much for that. Gurmeet Chadha is now joining in. Gurmeet, LG Electronics, there was a big valuation arbitrage which happened when the IPO was listed. But since then, we've not seen the stock do too much. At current juncture, with the kind of earnings they've reported, what is your own view?
So yeah, I think pre-IPO and the falling quarterly earnings were pretty good. Since then, I think it's been, although the premium segment continues to do well, they hit a benchmark of all the million ACs they did, with AC penetration just being 13%, and its portfolio is less cyclical, let's say vis-a-vis, the other guys like Voltas, etc., because they are across the segments. But I think with this input cost pressures, supply chain disruptions, you probably won't see much price action over the next few terms. I think the market is more looking at discretionary consumption names where there is good volume growth coming with margin expansion, and it's rewarding. So look at, for example, not comparable, but let's say Honasa numbers which came, some of the other consumer companies numbers came. So it's clearly market going towards growth, and rewarding growth versus things likely to get better or future growth stories.
Got it. Okay. All right. Gurmeet, anything stands out besides, these names from the broader markets? Lots of earnings coming in there. Any standout result for this week?
So, Nigel, a couple of names. I think the power equipment and transmission space, I think results were fantastic. I think GE Vernova continued a very good run. I think the earnings were stellar. I think now, so yesterday again, we crossed almost 260 gigawatts. So I think energy and electrification in terms of demand due to data centers, AI disruption, I think seems to be very secular. And I think, I've been speaking to a lot of genset guys, oil engine guys, transformer names. I think the order books are full for next 2-3 years. So I think this is one space one can start looking at some of the other names which haven't rallied as much, and probably there's some valuation comfort. And I think defense earnings, I think the reaction to Bharat Electronic earnings has been very muted. I think it's done very well. I think the order books looks very, very good. And the turnaround time on order is pretty good. At 80,000 crore order book with 27-28% EBIT margins, I think you have very good visibility for next, at least 5-6 quarters. So I think that's another name which stood out for me. I thought even Ganesha Ecosphere numbers were good. I think the commentary on the textile part, which is a legacy business, I think dampened the sentiment. The RPET, which is the recycled plastics, I think with the government notification of 40% mixing, looks very good. But I think the legacy business seems to be offsetting the rpet. But I think that there also seems to be now coming back, margins coming back, rpet utilization going up. This is a good story on recycling space.
Gurmeet, have you looked at TTK Prestige in detail? I mean, it's actually not done anything for many years in that sense. And there are those who believe valuations, etc., pretty attractive now.
So, Prashant, I think it did well largely because of these electric inductions, I think, which is about 12-14% of the sales. We like Stokecraft more. The capex is behind. So other than that, they have a very good export book. 25% of top line is export, largely to Walmart and now IKEA. The range in terms of cookware and appliances this election, the electric induction would be very sporadic in terms of volume, right? What you may want to project it over the next 2 years. Sometimes, let's say suddenly the war is over and LPG supply improves, these numbers might not optically play out the way you want it to be. So you want to have a more integrated, comprehensive player and not just, or that portfolio is still about 10-12%. So I think we like Stokecraft. Valuation is good, 1,800 to 2,000 crore kind of a market cap. And as I said, the capex is behind, so some bit of operating leverage hopefully should play out.
Info Edge earlier was seen as a whole play on jobs. Now jobs are being questioned on account of AI, but it gives you that optionality because they own other companies in terms of platforms. So what's the call now on Info Edge? And now increasingly they also have that GCC presence, which is helping.
Not sure, Rima. I think with this, probably we are staring at a phenomena where we'll probably have a white collar slowdown and a blue collar boom. I don't know how it plays out. I think I remember Prashant also talking about how the blue collar jobs like a gym trainer or an electrician or nurses, etc., are now probably getting more than entry level pay jobs in banks and IT services. And I think how it plays out, we have to see. So I'm better off betting on the new age names directly rather than a proxy play on it as of now.
Yeah. Point taken. By the way, the market's given up, right? Yes. It's fizzled out completely. And just about 50 points left now on the index. So I'll just tell you, it's come off pretty sharp. I mean, 23,750 when we started, and 50 points gone from the time that we started, which is just 15 minutes back. In any case, it was not sustaining, and it's all kind of flatlined in that sense. Sun Pharma numbers have come through, so let's just stick with the Sun numbers for a bit. So I think revenues are largely in line. About 2,700 crores was the profit number, that is largely in line. Revenues. Yeah, there you go. So, and I think revenues are also in line from what I could see. 2714, 2742 profits, and 14600 and 14530. So this is also largely in line on both the top line and the bottom line as well. Margins, etc., will start to flow in. EBITDA 3955 compared to about 43 odd crores in terms of the EBITDA line. So there's about 100 crore miss there. But otherwise, I mean, all told, this is a decent set in-line kind of number. I think stock after that $12 billion acquisition has done quite well from the time that the deal was announced. Deal was announced at about 1,600 odd in terms of price, and it's at about 1,850, 1,860 or so. So typically, large deals lead to some bit of hand-wringing anxiety, but I guess that generally the deal was seen as very positive in terms of valuations, etc. Although there are skeptics as well. Gurmeet, any thoughts? Sun Pharma?
So Prashant, we don't own it in the portfolio, but I've not seen the breakup. Would want to see the specialty portfolio, which is where they are trying to make a difference, and also some more color on, although they've clarified on the large acquisition they are doing. But maybe a little more color from the commentary. Numbers optically look in line. I mean, that doesn't seem to be way off from what the estimates are. And stock hasn't, if you see, hasn't done too much for a very long time. So I think in that sense there could be some margin of safety, but we don't own it, and I probably have to see the breakup.
Anything? What do you own in pharma?
So Prashant, we largely have CDMO names. So we have Laurus, Newland, and Divi's. That's where I've been overweight now for a while now, a little more than 4 or 5 years now. And in branded generics, we have Mankind, Pharma. So these are the 4 stocks we have in the portfolio. And Mankind numbers are very good. And I think CDMO, anyways, I think is in a very, very.
And were good. Newland were great as well, right? And I think Loris, of course, were pretty good as well. So Pharma's doing well for you. And Newland, I mean, what a stock's done very, very well. I mean, actually, so is Loris. Mankind, perhaps, is the underperformer amongst at least, I mean, the stocks that you mentioned. But
it's making up, Ishan, for some bit of flack you're getting on, let's say, the HDFC banks and the Reliance and others of the world, So, law of averages.
So are private banks a large part of the? I mean, because they're completely, there's no interest. No one. I mean, I'm not saying no one owns them, but ownership levels are very low.
Yeah, I mean, if you see MSCI EM index, Prashant, I think HDFC weightage has gone down by 4%. I think pre-merger, the combined market cap was 14.7, 14.8 lakh crores. Now, even if you adjust for cancellations, that's almost like 3-4 lakh crores of wealth erosion. I think same has happened with a lot of other names. I think somewhere there, I feel there, if the intensity is less, the ability to drive credit growth higher than the industry, the leadership on CASA, the leadership on names. I think somewhere it's gone soft and probably it's been taken over by some of the maybe the mid-tier banks which have got good capital infusion and growth capital, and then maybe with a lower base. I think somewhere probably the management needs to reflect on what they used to do and what they're doing now. I think somewhere there's a bit of a issue. Also, just give you, because I'm an ex-employee and long-term stakeholder in HDFC, I think somewhere the mid-management is also seeing a lot of attrition. Happens when you are used to seeing so much wealth creation through ESOPs and suddenly nothing happens for 4 or 5 years. So I think something needs to be reset there, to get the mojo back.
All right, it's part of the portfolio. Or no? HDFC Bank? You still own it, right?
HDFC. Yeah, we still have it. I mean, I'm just saying that, it's been that this kind of valuation I've not seen for like 2 decades now.
Yeah.
So yeah, it's probably at a decade low in terms of valuation.
Actually, all 3: Axis, ICICI, HDFC Bank. When they'll perform, we don't know. But typically, when no one wants to look at something, is when slowly it starts.
Hopefully.
We don't know when. Sun has moved down a tad bit, right? 27.1 compared to about 27.8. Gurmeet, I know you own Solar Industries, right?
Yeah.
There's a company called Nibe. It's based out of Maharashtra. I think it used to be, again, in the defense and missile space. I think some overlap in terms of products compared to what Solar does, etc. Have you looked at it?
We have looked at it. Also, we keep taking feedback from the existing defense names which we own, courtesy our relationship. It's very done well. It's just that it's too small. One thought process I have is that in a B2G business, which is largely government or export, the volumes are chunky, and you can have a bit of a periods where you can have balance sheet stress on supply chain disruptions and raw material prices, something as basic as, let's say, ammonium nitrate. So if you're taking a long-term view, and that's my learning, because I've done some small cap names also in defense, is that in periods of underperformance, the balance sheet needs to be strong, and bigger orders would come to larger and stronger balance sheets. So I think the game changer would come, Prashant, when you'll see more missile orders. I think we probably need a 5,000, 6,000 kind of a missile inventory, ballistic missile inventory, and our number is quite low. And the entire ecosystem probably can make 100, 120, 150 a year. Also, the indigenous content is moving. So BrahMos, for example, Indian content was only 15%. Now it is 70%. Right. So I think this is one area. Second, I think Mr. Nawal mentioned about the anti-drone system. The Bhargavastra, which can fire about 70, 80 drones, let's say, in a minute. Now, India needs to, roughly cover at about 200 odd sensitive sites, which are important sites like PM House or a parliament or, let's say, a Taj Mahal or religious monuments. I think, and that product, if once it gets approval and gets commercialized, would be actually much bigger than, the Pinaka rocket or some of the other names we have seen. So I think it's a long growth. You have to see the R&D pipeline and you have to see the product potential there. And I still think, despite the run up, I think that VL and Solar has a lot of legs. That's my view over the long term. I could be right or wrong.
No, the solar management, when they were with us 2 days back, they said, well, this Bhagavastra opportunity could be larger than Pinaka. So prima facie, that's what they said. So you're absolutely right there. Well, Sun, let's just go back to it. Vivek is here with a little bit more here. Vivek, take it away.
Well, that's right. It appears to be a bit of a miss as far as Sun Pharma's Q4 FY26 numbers are concerned. A poll conducted by our colleague Ekta Batra, when you're comparing it to that particular poll, looking at the revenue slightly about, you could say, in line to what, we were anticipating, coming in at 14,610 crore rupees. But, the EBITDA is where the key disappointment is lying. EBITDA close to 3,950 crore versus our poll of a little over 4,040 crore, indicating a little over 7% miss as far as the core EBITDA is concerned. Now, that EBITDA miss has actually translated to a margin miss as well, close to 60 basis points miss against what we were anticipating in terms of EBITDA margins. On the back of that, when we're talking about the net profitability too has missed our poll by close to 30 crore rupees. Now, coming about the US sales has actually seen a little bit of a downtick, down 1.1% on a year-on-year basis. The street was anticipating a mild uptick. Now, key to watch out for in terms of Sun, two very important points that we will be watching out for in terms of the management commentary. The first one, of course, will be any incremental commentary coming in as far as the Argonine acquisition is concerned. The street is wanting to know about how exactly that particular deal will be financed and the contours of the financing of that particular deal. And number two, of course, will be an update as far as the halal inspection is concerned. It's been a long overdue inspection, and that is also something that the street will be waiting out for. But on the back of the mild miss, you're seeing a bit of a downtick and a sell-off as far as Sun Pharma is concerned.
Thank you very much for that. Gurmeet, we leave the conversation here. Thank you very much for joining in. Enjoy your weekend. We will get into a break on the other side. Jitendra Gohil of Bajaj Alternate will join in on the other side as our Alpha manager.
Okay, welcome back. 65 points on the Nifty, 23,700. Jitendra Gohil is with us, Chief Investment Officer, Listed Equities at Bajaj Alternates. Jitendra, good to have you with us here. Thanks for joining in. So just sort of give us a sense of what you have been doing. What kind of positions have you been running? Overweights, underweights? And I'm assuming you can do long short, right?
No, only long.
Only long. So just tell us overweights and underweights.
Yeah, hi Prashant. So thank you for inviting me on your show. So first of all, how we look at this market, a lot of concerns on the macro front that India's current account deficit is going to widen. So I think these macro challenges will offer actually very good opportunities. And when we look at the entire, the situation globally, it's not only India which is suffering. For example, in US, which is the best performing market, but on the ground, if you see the consumer sentiment in US is all-time low. Even the sentiment is lower than during COVID or financial crisis, but the market is all-time high. Similar situation in South Korea, where the market is pulled up by a couple of stocks. But in India, it's a different story. We think that, look, India is a very, very broad-based market. You have consumption, pharma, IT, and as we see that this war is getting prolonged, we are seeing this kind of concerns are emerging. But on the other hand, we see that there is significant opportunities are emerging in certain sectors where government is trying to nudge the industry to invest. For example, let's say shipbuilding sector, where we think that from a 2 to 3 year perspective or even longer term perspective, there's a good theme emerging out of this shipbuilding and ship maintenance sector. Just to give you perspective, the overall incentive that government is planning somewhere around 70,000 crores, while the total top line of all these shipbuilding companies, all top three, is somewhere around, it's actually 4x of all these companies' top lines. So that is one sector, I think, that is looking extremely attractive to us. Second thing that we look at is the EMS space. Now, you have seen that the EMS sector has been doing pretty strong over the past few years and so, and we think that there could also be a buying opportunity because Q1 is going to be a little weak for the sector. Probably the June quarter will see more margin correction, and there you can see certain opportunities might come in. And lastly, we are also looking at, let's say, UP election and 8th pay commission, some consumption play related to the UP and Bihar side. So I think there are pockets of opportunity where we think there is good opportunity to make alpha in this kind of market.
But Jitendra, at the index level, you think this year is going to be a washout? Hard to see meaningful returns from here on?
Yeah, Rima, see, like last 2 years, we have seen Nifty giving flattish return, Nifty mid-cap, almost 8-9% return over the past 2 years. But I think, look, India has been the best performing equity market for several years now, for decades, I would say. Right, our ROEs are the best in the world, almost 16%, just below US, which is somewhere closer to 18%. Our margins are at all-time high. So, from fundamental perspective, from balance sheet perspective, I think India is doing pretty okay. It's just the patch that I feel that it has come on our way, where market is on the sideline, and probably we will see very, very negligible return this year. We are not very bullish, saying that the market will bounce back sharply on an index perspective. But I think one should stay invested, because if we look at next couple of years, I feel all these headwinds that India is facing probably might cool down. And there you see a very sharp recovery happening probably next year or so. So this is the year where we are very, very cautious. We wrote this beginning of the year, that this year is going to be a little bit damn squib. And that view is playing out. It's not a very exciting year to be, but slowly, gradually, as this headwind abates, I think market will bounce back sharply.
All right. Hi, Jitendra, and congratulations on the new role, new avatar. Wishing you, your team, all the very best as you take guard in the new organization. That said, I think just to sum what you said is that this year is going to be a year of consolidation with individual stocks and sectors doing well, while next year you're seeing a bit of a bounce back. Now, let me ask you about one of the most debatable sectors, which Rima, my colleague, tracks very, very closely, tech. You didn't mention that, so I'm asking you. You mentioned EMS and a couple of other sectors. What's the view on tech? Time to get in?
See, Nigel, first is that the rupee has depreciated. Yeah. And for tech companies, this is certainly a kind of a tailwind. So from that perspective, tech becomes like a safe haven in terms of parking when the rupee falls. But as of now, the valuation for tech companies have come down massively. So I think they peaked sometime in 2024 end. From there to now, the tech index is down in terms of P ratios are down 50%. So there's a massive consolidation happening. Obviously, AI is going to take away a lot of businesses for them, but they are also investing in new areas where we see that the businesses opportunity might come in. But from tech perspective, we are a little bit underweight and negative. However, there are certain pockets like digital opportunities, especially in the travel tourism sectors, in advertisement, digital ad. I think from tech, if you look at overall, I think mid-cap tech companies, there are certain opportunities that we are looking at.
So would they be the outperformers like a Persistent, Coforge, or have the ER&D companies started looking attractive after the recent underperformance?
Yeah, certain. So we go stock by stock, and we think that certain companies which are into digital advertising, that is one of our topics. We are also looking at some platform companies. We don't call it as exactly the tech companies, but platform companies where Q-commerce related companies. We believe that there is a good opportunity for these sectors to do much better than where the overall index is heading. So I think there are pockets of good opportunities in the platform-based companies and tech, mid-cap tech companies especially.
Jitendra, always a pleasure talking to you. Thanks for stopping by, giving us your views. All the best in the new role, and we catch up soon as well.
Thank you much, Nigel. Thank you, everyone. Thank you.
Keep an eye out on the bottom of your screen. We have Minda Corp. The stock has seen already a big run in the last few years. I think from around 200 rupees that it spent a lot of time in, that's moved to around 550 rupees or thereabouts. But those numbers look pretty okay. Explains why Minda Corp has moved actually to the high point of the day as we speak. A bit of a spike. A spike is what we're seeing. I think there was revenue growth. There was a little bit of margin expansion. The profit number as well looked quite good. So that one pops up in trade. But let's tell you what's going on in the F&O market. Well, in today's trading session, the Nifty Bank after a while, that's actually doing a relative outperformance. So that's headed closer to on the 20 and the 50 DMA, around 700 points away from current levels. That's going to be an extremely crucial resistance mark, ballpark around $54,700. So we'll keep an eye out on that. Next up, the Nifty is higher, not convincingly so because we got rejected from higher levels. And the India VIX is not cooling off yet again. Remember, for the week on the whole, it's actually lower. So, that's another data point you should keep in mind. As of now, not really worrying. You don't want the VIX to get past the 20-odd mark. Individual strikes should come up for you. 23,800 call. The premium out there has come down to around 101 rupees or thereabouts. As of now, actually, it's at around 135 rupees as we speak. So that one started the day, apologies, at around 101. That's moved to around 135 approximately. On the flip side, you also have the 23,700 put. Out there, the premium has come down to around 138 rupees from around 204 rupees or thereabouts. So in the near term, we're in a bit of a range. First support level on the downside, 23,500. The next level you're looking at is around 23,250. That's the level from where we have bounced numerous times. But where does the Nifty face resistance? Bang on, where we are right now at. We are at the 50 DMA. The 20 DMA is in sight. So the bulls will want to put in a bit of a fight and get closer to around the 24,000, which means that we would have crossed this near-term hump that we're looking at. Individual stocks, 2 of them have come in for short covering on decent volume, so I'm pointing them out. You have Suzlon, short covering bounce being seen out there. From the tech space, Wipro is another stock that's actually been a big underperformer. That as well has come in for a bit of a short covering bounce. And Bandhan Bank, that's holding on to its own. Remember, it corrected from around the 210 rupees or to around 190 rupees. Today, we're seeing a good amount of delivery-based buying, and we're also seeing some long build-up. So I think the zone that it's seeing a lot of buying is that 185 to around 190 rupees. But on the upside, 210 rupees appears a bit of a resistance mark. We'll slip into a short break, come back. Nimesh is waiting for us. He'll tell us what's all going on in the dealing room, and it'll be dish to chatter with a bit of a mix. Stay with us. Welcome back. Well, we've come off a little bit from the top and from the broader markets as well. There's quite a bit of action that we're seeing out there. Hunasa actually is facing some resistance at around 400 rupees odd because that level has quickly got rejected. So that one should come up for you on this screen. On the flip side, I think Le Travenues Tech, that stock spikes up. And as Mangalam told us earlier today as well, Varun Beverages, favorable numbers coming in there for the company. So the stock has spiked up. But let's go across to Mitesh. He's joining us to tell us what are his fresh trades. And Mitesh, I wanted a call on the Nifty Bank. That's headed towards the 2050 DMA, so we'll have to keep an eye out on that. Is it looking good for more?
Really, Nigel, I think it's still like the Nifty. I think the Bank Nifty is also, if you look at the last 6 days of data, it has failed to sustain about 54,300, 400 area, which was also gapped down on the 12th of May. And on the downside, 53,000 has, at least on 2 or 3 occasions, come out as a very good score. So it's 54,300 to about 53,000 kind of a range for the Bank. So not much happening there. Both the indices, in fact, look like, getting into or continuing this sideways choppy kind of range.
Okay. In terms of, trades, Mitesh, what do you have?
I have LIC as a BTST. Came off after a strong opening, but there's still a price gap which is pending, and I think that the stock pattern does look like it's improved slightly. So keep a stop below 810 and for a target of around 825, 828 for tomorrow. That's on the long side. And the other one is MFSL. It's done well today. It's given a good price and volume breakout. So that's a BTST with a stop at 1665 for targets in excess of 1700, 1705.
Okay. All right. Thanks very much for that. So sideways consolidation, Mitesh's view from the morning earlier today as well. Well, let's go across to Nimesh now on the D Street chatter segment. Nimesh gets us a sense of what the chatter is. Nimesh, take it away.
Hi, Prashant. So a decent day of trade, largely led by the financials. To me, it looks like there's a bit of short covering rally as well in the private bank names. The Nifty Bank is up nearly 1%. I guess there is a bit of anticipation on what to expect in the RBI meet as well today evening. Apart from the RBI dividend, there could be a couple of other measures as well. So that can have an impact on the Nifty Bank on Monday trade. So that's something to watch out for what comes up in the RBI meet. From a flow perspective, again, a mixed day of trade. Remember, there were multiple large blocks, so that will have an impact on the institutional data today. But outside of that, my sense is there is a small MOS sell basket at a couple of FIDs. So a bit of selling towards the end in some of those large cap names by large institutions. Technically, 23,300 and 23,900 is a range in which the Nifty has been for the last couple of weeks. So that's a level to watch on either side. But any big announcements over the weekend, either by the RBI or from the government, could see a big, big upside on the Monday. So that's something to watch. But today, I guess it's largely led by the financials on short covering. But the FI number will look large because of those large blocks.
Okay, all right, Nimesh, got that. What about individual stocks?
So the first stock on my list is Premier Energy as well as KNR Heat. Both the stocks have been consolidating with a positive bias, but my sense is there could be large blocks coming in both those names very soon. So that's something to track there. The second name is Misho. For the second day running, that's been buzzing. The delivery volumes have picked up in the last couple of days. There is buying from large institutions and expect high delivery volumes today as well in Misho. There are a couple of names where there is a small MOC sell, which is Infosys and Bharti Airtel. A very small figure, but apart from large cap names, these are the two names where there is a small MOC sell as well in today's market. So that's something to track as far as the flows are concerned.
Got that. Lots of blocks, right, Nimesh? Sellers galore.
Oh yeah, absolutely. So it was anticipated that towards the end of the earnings season, you'll see that block sales emerging. So 4 large blocks in today's trade. The first one is Paytm. We reported yesterday that the private equity investor was a seller. They sold 1.3%, which is Safe Partners. They sold 1.3% in the block today. So that was one large block, close to 1,000 crores. 960 crore was the deal size. So that's one big block. The second was Pine Labs. Again, there we saw a very large block. It was anticipated for almost a week now that after the 6-month lockup, the P investor will sell. They sold almost 2.5 crore shares by a block deal. It was the size was worth more than 350 crores. So that again will add to the institutional side. The third one is JSW Cement. This is interesting. My sense is that the Apollo PE was a seller in today's block deal, and some large domestic mutual funds were buyer in today's block. So again, that was block close to 530 crores. So again, a large block there. And the last one was Adani Energy Solutions. We've been seeing a lot of blocks in the Adani group names in the last couple of weeks. And in most of the cases, one of the large FI is a seller. It's a kind of a clean out trade there. And on the buy side, it's largely SBI Mutual Fund or Capital International. They've been big buyers into the Adani group names in block deal. So I need to see whether there could be any disclosures. But from a flow perspective, that clean out trade has happened in Adani Energy Solutions with a 45-50 lakh shares of block in the morning trade.
Got it. Thanks a lot, Nimesh, for that. I think JSW Cement as well, I concur on that one because I was tracking that rather closely. Hopefully, we get the management on the channel to talk with regard to business on the way ahead. 2 sessions, stock up close to around 15%. Still 10% off the IPO price of around 150 rupees or thereabouts. But the big story right now is the Indian rupee. Pull up the intraday chart out there. That one has, in fact, pulled back quite strong. From almost 97 yesterday, it's come back down to around 95.8, which is good news, brings some stability. We had a one-way slide, so it's pulling back some of the lost ground. That's good. That'll be heartening to see. Remember, that's ahead of the RBI meet as well, so keep an eye on that. And the other one that I'm looking at is Minda Corp. We briefly covered those numbers. There was some growth on the top line. There was some margin expansion. The profitability did balloon up. But that one suddenly got some legs. As we speak, up close to around 8%. So massive move out there. We just highlighted the stock around 10 minutes or so ago with regard to its numbers. I think it was $550, $560, and suddenly it's taken off. So volumes picking up on that one. Anand joins us on the show. Hi, Anand. How are you feeling about the markets? And fill us with one idea that that you liked. Something that caught your attention during the course of the week.
Well, I'm not sure I can offer ideas at this stage, but in terms of, the places where there is still kind of potential for upside, to me, still remains the banks. The market doesn't seem to think so, but, we are not looking for trading ideas. So I would think that if you are looking for something to stock up on, that would be the place to buy. There is a rationale for it. There is a growth that is visible, and there is valuation comfort. Almost every other sector that you can think of is trading at valuations which still do not provide you any margin of safety.
So private sector banks is what you would go for. The larger names?
Well, that's right. The larger names have the best opportunity. I mean, there are other things like, for example, you look at the valuation of LIC. It is trading at, less than. But if you think of it just as a mutual fund, for example, it is trading at less than half the value of the stocks that it owns. I mean, in the sense of the EV, the embedded value that it has. So it's trading at half the embedded value. Surely that cannot be much downside from there. So there are stocks which you could find from that kind of perspective, but these are not strong growth companies where you would expect that I mean, frankly, the incremental business for LIC will not move the needle in terms of the earnings that it has. So, obviously, it's not going to be a rocket.
What about special situation? Something like, say, Saman Capital, right? The owners are out and they've taken a big write-off. They've got a strong backer from the Middle East now. So it's complete. I mean, they got a new name earlier, and now, of course, the old. I guess I'm assuming the pain is all flushed out. Available at 0.8, 0.9 times earnings.
Well, there is no particular reason why one should not look at it. However, in my experience, what happens is that unless there is also a change in the management, it becomes a bit of a problem. So ownership is one thing. I would have been happy to see the existing management change as well in terms of the CEO. That, to my mind, would have given you a lot more comfort. But that said, the fact is, as you said, after a cleanup, it is probably trading below book. So therefore, not much to lose there.
Right. I think there is, stay with us, there is there's Reuters reporting that 35 ships, including oil tankers, container ships and other commercial vehicles passed through the Strait of Hormuz in the past 24 hours. So I think it was yesterday or day before yesterday, we got a number of 26. It's 35 now. So increasingly, it's looking like without too many people making too much hullabaloo around it, there is more and more passage happening through the strait. So, a bit of a normalization, but not in the spotlight in that sense, because, I mean, both sides don't want to give up the narrative as well. Well, we'll track this one, but it's important because at the end of the day, what matters is if the strait is open or not. And compared to no ships, 26 ships, I think, yesterday and 35 today. So that's not bad. Well, let's go back to Nimish. Bernstein has initiated, or rather has coverage on a bunch of stocks. I think they coverage on 4 stocks. So after the recent, clearances with regards to US investigative agencies, Bernstein has updated their view on these companies. Nimish, take it away.
That's right, Prashant. So it's an interesting report coming in from Bernstein on the Adani Group stocks. They do cover a couple of names, but largely they've evaluated all the developments that has happened over the last couple of years and where the group stands right now and what their view is on the individual names. The reason I thought I'll highlight this largely because the institutional interest has gone up in the Adani Group names, right? The SBI Mutual Fund is in a big buyer that's been disclosed in public block deals. So is Capital International, who's been a big buyer of Adani names of late. So first and foremost is Adani Ports. They have so Bernstein has an outperform rating on Adani Ports with a target price of 1880. They believe that despite the rally in the recent months, the stock continues to trade in line with peers, and actually it's a cheaper large cap name in the India context compared to the other large cap companies with a similar growth. So that's the reason why they still have an overweight rating or outperforming rating on Adani Port with a target price of 1880. So that's the first name that they cover extensively. The second name is Ambuja Cements. Now, on that, they have a market perform rating with a target price of 450 to potential further upside from here as well. They believe that the stock is trading at a discount to the major peers, but the stock has struggled because of performance in terms of growth. So that's the hope that maybe over the next few quarters you'll see the growth coming back in Ambuja Cement. So they still have a market performance rating on Ambuja Cement. The third name is Adani Green. Contrary to other group names, they have an underperform rating on Adani Green with a target price of 864, a meaningful downside even from current levels. While they believe that it's a clear right to win, the company has right to win. In terms of valuation, it's sitting at much higher multiples compared to the peers. So on valuation, they have a bit of a discomfort in Adani Green, though they like that they have a good runway of growth going forward as well. So 3 or 4 companies that they cover and they've put out a note on. I think they have a coverage on Adani Power as well with an outperform rating, but largely they still believe that there is room for outperformance in Adani Ports with a target price of 1880.
Got it. Okay, all right. Thanks a lot, Nimish, for that. For the time being, we'll slip into a short break, come back, we'll wind down the markets, we'll talk some stocks with Anand as well.
You know, the top loser on the Nifty today is Max Healthcare. Stocks down about 6%, almost 6.5%. Reported numbers. So let's just sort of throw it across to my colleague Ekta. She caught up with the chairman of Max, Abhay Soi, to understand the way forward for the oncology segment that witnessed a drop for the quarter. Here's an excerpt.
To actually see the occupancy has remained the same. So it's not as if other specialities have not supplanted that. And with respect to margins, again, you've seen the margins were 27.2, but now it's come to 26.8. So, it's not a big sort of change. Considering this big rollout of 20% capacity as well, which supposedly, previously most analysts felt would have massive impact on margins when we rolled out this capacity, and yet we see it's only a 0.3-0.4% impact. So I think that's worked out well. We've always guided to the fact that this new capacity rollout will not impact our margins, and I think that is something to which we will be able to demonstrate again. So I think it'll be 21, 22, about 2% revenue you lose because of this whole med-onco, but we don't see any impact on the bottom line really, because like I said, it does get supplanted by or substituted by other businesses, and the margins are the same.
Well, you can catch that entire interview a little later here on the day. That's Max Healthcare, still down quite a bit. Anand is with us. Anand, any thoughts on names like Max, etc.? Valuations, of course, high, but they are good businesses, and there's no dearth of demand in that sense.
No, absolutely. I think healthcare, especially hospitals, is an easy sector to be bullish on. The challenge, like you said, is simply the valuations, but then you can give it time. This is, you're not going to find fewer people going into hospitals. And given this pathetic state of public infrastructure, you have to assume that as more and more people will have to move towards private sector healthcare providers. The only challenge is that, all of them are now owned mostly by private equity funds. So the way that they try to extract revenues becomes a little nauseating. But from an investor point of view, that usually plays to your benefit.
Yeah, by the way, Anand, I had the IIDI chairman as well with us. And that's the sector where you find a little more comfort compared to many others. And the distribution reform consultation paper should be out in the next few weeks, according to the IIDI chairman. And I mean, they want to do big things. They want to increase penetration and push it in a really meaningful way. Number of policies sold. I mean, that's what they're talking about, and that needs to go up a lot more. So price of insurance is a big focus area. Anand?
Well, yes, the only challenge I think with healthcare insurance is that people still don't get, there are so many loopholes within the policy that even somebody like me, for example, finds it difficult to decode what actually will be paid out if you were to actually use that policy. For the most part, luckily, one doesn't have to. But for those who do, it is a problem because there is always something which you haven't thought of or which you haven't seen in the small print. They should have a standard policy with no exits, and you can price it wherever you want. But that is something that will simplify delivery of healthcare insurance a lot more. Currently, it's almost like trying to find a needle. Where are you going to be deceived is the challenge that you have when you're buying healthcare insurance.
Well, that's a perception, at least somewhat, and that needs to be changed as well if you want to really get more people into buying insurance. Anand, thank you very much for joining us. Good speaking with you. Have a good weekend. We'll chat again soon. Markets are up about 100 points, so there's a bit of a bid emerging once again as we, wrap up things. 23,750 is where the index is now trading, is now closing, by the way. So actually for the week, it's a clean 100-point gain, I think, right? I mean, the actual change, I'll just tell you, is 105 points. Friday to Friday, 105 points to show for it on the index. Of course, I mean, it was pretty volatile. Big swings from the low to the high. I mean, market refusing to stay down, but of course, selling off from the day's high as well. And I think today was a case in point once again. 23,859 was the high. And of course, we closed off those levels coming through. Bank Nifty up 0.6, mid-cap index up 1.3, the small-cap index up 0.4. The big sectors which got smashed last week all came up a little bit. IT was up 4%, real estate was up 2.5%, defense was up 1%. The CPC index was the loser, and that was down about 2% or so this week. So that's the picture. Well, it's a wrap on this edition of Closing Bell. Thanks very much for staying with us here. But more comes up on Editors Roundtable on the other side.